I'll be joined today by Scott Clayton, James Berge, and Tom Helm. They're going to introduce themselves in a second. We have a very interesting panel prepared for you today. We're really trying to not go to the traditional areas of fraud and questions and make it a bit more entertaining. So we're going to be covering not only, do they only happen in claims, what's the end-to-end journey, and how is it impacted by fraud, but also has technology enabled us to do better things in fraud detection, and has it also enabled better fraud and fraudsters. We're going to also cover the InsurTech ecosystem, and if we have time, what's going on in motor. But most importantly, if you have questions, please submit them in the app, and I'm going to be scrolling through them, and hopefully we'll have the last 10 minutes for your questions that might be within those 5 buckets I mentioned or in other topics. Okay, so if you could all take a minute to introduce yourselves, tell us how you ended up in fraud, what your role is about, and why you think this is a fascinating area.
Afternoon, everyone. So my name is James Berge from Allianz Insurance, Allianz Commercial. I've been with Allianz, dare I say, 23 years, so quite a number of years. And my background actually is not fraud, dare I say. So I'm up here on a fraud, speaking about fraud, but my background isn't fraud. So my background is actually underwriting. So quite a number of years spent up in town here in London. But lots of variety of that, not just in underwriting, but in operational, in technical and delegated authority. But in the last sort of 6-7 years or so, working in the claims environment as head of counter fraud, but not just in claims, but also application fraud. So looking at kind of the end-to-end journey of fraud. And I think really today it's really quite exciting to be here to start talking about fraud. We talk about fraud in its normally about claims fraud, but it's actually application fraud is a big part of what we do. But really excited, to listen to a lot of panels that's got on today, and excited to see what questions we're going to get from the audience. So,
thank you, Scott.
Thanks. Afternoon. My name's Scott Clayton, so I work for Zurich and head up the counter fraud team from a claims point of view. So unlike James, my role is solely claims related. I started with Zurich 36 years ago. I got a job in insurance to pay off my credit card and never thought that I'd still be sat here after all this time. I have been working in the counter fraud area for the last 17 years, so almost half of that career. All of my previous time had been in claims, albeit I spent about 5 or 6 years running the complaints team. And it was at the time when counter fraud was really just becoming a separate discipline within insurers, and we found that making a complaint often went part and parcel with making a fraudulent claim to try and detract people from the matter at hand. So that led me into the counter fraud world. Our team now consists of over 60 people in our claims investigation unit. We deal with everything from your low value iPhone theft or loss right through to complex and serious injury claims, major property losses, so everything general insurance related that's suspicious comes into our team. And I often say to people it's about as much fun as you can have in insurance dealing with fraudulent claims, which I don't know is saying something or not.
Tom.
Hi everybody. So Tom Helm, I head up Willis Towers Watson's claims consulting practice. And there's 3 propositions that we provide to the market, all of which touch on fraud in one way or another. So we provide out-and-out consulting, so that's strategic, tactical advice to claims functions in the UK and right across the globe, in fact. We also provide a UK motor claims benchmarking service. So we get to crunch 9 million, 10 million claims every 6 months, £15 billion worth of claim spend, part of which includes analysing the fraud side of this. So how good how do your fraud metrics benchmark against your peers, whether that's looking at the human detection or the technology detection-led fraud. And then finally, we have a technology arm. So we're a big technology provider to the insurance market, and we're providing advanced analytics in the claim space, so helping people detect fraud in real time using some of our advanced technology in that space.
Thank you, Tom. So we were starting looking at that end-to-end journey, right? And part of it is claims, but it could be inception fraud as well. Could we go into some concrete examples of what the largest drivers are for fraud and what modern insurance fraudsters look like? Because they have changed over time, and you've seen that evolution.
Yeah, absolutely. And I think I've kind of alluded to that already in terms of just that end-to-end journey. I think we quite often think about, as I said earlier, that fraud is really a claims problem, but it isn't. It is end-to-end, but in terms of application. So this is when people actually apply for insurance. So in my world, this is largely through brokers. So we largely rely on our broker network to actually provide information and do a lot of that validation for us at that stage. But we still see a lot of fraud in that space, so it still gets through those brokers. And so even though that validation is still happening, we still need to do our end of it. And of course, that technology plays a big part in that, and to validate and enrich that data that we get. And of course, the claims side of it is the big part, and dare I say, that's the big sexy bit that we always talk about, because that's the bit that has high value a lot of the time. And I think fraud has evolved massively over the years. And I think over the last, dare I say, and I think it was the previous session that mentioned the C word, the COVID word, dare I say, and I think people have moved, certainly, and I'm going to say it more into like the financial crisis that we see ourselves in now. And I start to use the phrase from greed to need. And I think the fraud is really evolving from this previously that people felt that they needed to commit insurance fraud for a bit of greed because they wanted that extra money, versus these days I think people think that they deserve it because they can't afford to live. And so actually there is a developing need for needing to commit insurance fraud. So therefore I think it's really important for us to maintain that emphasis on detecting right throughout that journey.
And Scott, do you think, in a personalized space, or is it always the end customer? So who are, the ones that are driving fraud? Is it a much more complex ecosystem, actually?
Yeah, so if you look at across our whole portfolio, the most money we save in fraud detection is in the casualty lines, so in our employer's liability and public liability. Average value of a claim in that space is larger because of the nature of the claims. They're usually injury. The more transactional, attritional type losses are your first party property, but they are without doubt the hardest claims to deal with because of in effect, you are suggesting that one of your policyholders is dishonest, and that doesn't come without any risks. So we've got to make sure that we are investigating the claims properly, thoroughly, proportionately, because these are policyholders, these are customers. And when you've got brokers involved, solicitors, loss assessors, the ombudsman, obviously will adjudicate on decisions, you've got to get that right. But to add to what James was saying, one of the things that fascinates me across fraud is the common trait across all of fraud is dishonesty. So you look at any fraud definition and you always see the word dishonest. And what we're looking at is the propensity for people to lie. So if you're taking out your insurance policy and you're looking for a cheaper premium and you decide to lie about your no claims bonus, or you lie where your car's garaged, or you lie about previous claims, you're doing so with a risk that you might get caught. And what's the penalties for being caught on a household claim? Your policy cover might be invalidated. You may have a large fire and find out that you're not insured. And that is a risk that people take when they're lying. What we see, though, is that propensity to lie runs right through the process. So if somebody is a bit loose with the truth when they take a policy out, then they'll be more likely to commit a fraudulent claim further down the line, because that dishonesty line has already been crossed. So a lot of the time when we have losses in, we'll look at that whole end-to-end dealing with that customer. So it's not just, so if we, for example, let's say we get a restaurant fire, and you look at the fire and you think, well, there's arson involved, it's a business that was struggling a little bit. You don't often catch somebody with a petrol canister setting fire to a building anymore, right? What you can do is look at that whole end-to-end process of what was that person's dealings with us initially, and did they tell the truth? Because if they're willing to set fire to their restaurant to get an insurance payout, then quite likely they're probably told us lies at the start. And the final point I'd say is, linking to James said about the cost of living crisis, people are looking to save money on their monthly budgets. And if they can save money by shaving a few quid off their insurance premiums, then guess how they do that? They lie about it. So it just means altogether we're busy across that piece at the moment.
Thank you. So if we now look into technology, right? Technology has been a big enabler. You mentioned some of, of our solutions in the context of technology, and it has enabled us to detect fraud almost in real time, sometimes in real time. So I would like to go into some concrete examples of how we are applying and deploying, because it's not the same thing, machine learning, AI, advanced analytics in whatever flavors to detect fraud.
Sure. So, I mean, I think this is the kind of the next evolution of the use of technology and analytics in the fraud process. It's been there throughout the last 25, 30 years. We've gone from data matching, and as you say, now we're all the way through to how can we use more advanced capabilities and AI machine learning to help detect fraud. The key benefits of being able to use machine learning, AI, is the ability to crunch a vast amount of data, including unstructured data. So it's really opening up the amount of analysis that can be done using all that compute capability. So if you take a couple of examples of where you kind of might want to be applying this, you've got different types of machine learning that you can apply. So one good example covers quite a broad range of different models, but would be supervised machine learning. So in this scenario, you're using the machine to help you identify similar types of frauds that you're already finding. So it's basically learning what are the characteristics of the fraudulent claims that you have been identifying over time, and helping you identify a much broader selection of those, because it says actually you've missed a whole bunch of these types of claims in the past, or helping you detect them much earlier in the claims process, because it can quickly pick up key elements of data that are characteristic of the types of fraud that you've already been identifying. So it's a really powerful way of helping identify more of the types of fraud that you're very good at or have been historically good at already identifying. So widening the net in that sense. And then secondly, you have unsupervised models. And essentially what these are doing, so these are a bit more free, if you like. They're a bit more, by their own term, unsupervised. And what they're essentially looking for is anomalies in data. So they're helping you identify things that you wouldn't ordinarily spot, that a claim has got some different characteristics than perhaps the majority of all your other claims. And this is where we found some really interesting new areas for claims teams to explore, fraud teams to get involved in, because they can see actually, these batches of claims, they're actually really interesting. We can see why these have been highlighted as having different types of data anomalies, and we're finding some really useful insights on those. So as you find more in that space, they then become more of the claims that you are then, you're widening your net even further, so they become into your claim records, and that then feeds back into your supervised models, because they're now saying, oh, okay, we've got now these additional claims that the unsupervised models helped to detect, to bring in. So you're constantly using both of those to build and understand, and obviously data and claims evolve, so that it needs to keep pace with those changes too.
Yes, so Scott, would you like to build on that, on how are you deploying technology in the context of Zurich?
Yeah, I think this has been an evolution. Technology is often seen as being the #1 priority for fraud detection, when in actual fact, we'll always say it's not, it's the people. And we've got, fraud's an issue that spans across the globe, and we're a global insurer, and we've got small and large countries that operate in their various markets, and they'll often come to the UK because we have such a fraud problem and say, right, what solution do I need to put in to identify more fraud? I've got one person in my team. And the answer is always, hang on a minute, you don't need a solution before the people, you need the people first. So the best device, if you like, to identify fraudulent claims is the intuition of your claims handlers. And the more experienced your claims handlers are, the more they know what a good claim looks like, the more that they can identify when something doesn't quite look or feel right. And that gut instinct is arguably our most valuable commodity. Now, once you've got to the point where you think we're pretty much getting as much manual referrals as we can. And let's be right, it's not perfect. You've got some people who almost believe nothing, and you've got some people who can't even spell fraud, and you've got everything in between. So it's not a perfect model in terms of making sure that all your referrals are coming through. And technology adds that helping hand. So where you're applying data analytics, where you're applying background research, where you're making the use of technology to provide that incremental lift, then arguably you're closing the gap further between your detected and undetected.
So, James, do you want to add some controversy to that?
Yeah, absolutely. I guess we're in an Allianz a slightly a kind of middle ground in that, because I completely agree that people are fundamental to fraud detection, and we have some incredible people that on the front line dealing with claims, dealing with some customers, obviously identifying fraud where it needs to be. But for us, it's about I think to Scott's point, really, I mean, you can take it to an nth degree where your people have found so much, but actually what we've done recently is implemented 2 machine learning models, and I think this plays to Tom's point, both one and I think we didn't rehearse this, but a supervised and an unsupervised model, because we know what fraud is today in terms of the supervised, and when we're training it, we know what fraud looks like, we can tell it to find more of that. But fundamentally, we don't know what fraud looks like tomorrow, so we need to find more of that. So the bit for me is getting the systems, getting the algorithms to find more of that anomalies in data. Is it fraud? No. Okay, don't find any of that. Is it fraud? Yes. Okay, we'll find more of that. Use the system, use their algorithms to find more of that, and then push that to our people to investigate those claims rather than letting our people then decide. So for me, it's about how you harmonise people and technology rather than just one or the other.
Yeah, so essentially the augmentation of people with technology. Absolutely. But actually, that was a good segue into the next block of questions, which is about technology has also enabled fraudsters, and they've become more sophisticated. There's deepfakes, there's a number of things that we can do with technology that have made, fraud detection more difficult. So, Scott, how much do you think we're missing? How much are we missing? If I put you all on the spot and say, what is the percentage of fraud that we probably are missing, and based on historical evolution of what we were missing and then realized, what do you think? Are we missing much?
So James and I sit on the ABI's General Insurance Fraud Committee, and several years ago we debated this point. We spent probably far longer than we should have done on it, trying to guess how much we're missing. And we looked at academics, we looked at previous research, we looked at all sorts of mathematical algorithms and came up with the conclusion, which was, I think we're probably missing the same again. So there wasn't a huge amount of science behind it, but if you think that the industry is identifying, I think it's around about £1.5 billion worth of fraud a year, there's a suggestion that there's probably the same again in undetected. And we're always in danger of sitting on stages like this or being quoted in media and press saying, look at how much of a good job we're doing in counter fraud. We just have no idea how much we're missing. And some of the examples that you've just mentioned there, particularly around shallow fakes, where people are really clever in terms of manipulating images and documents and sending them through to support a claim that, to be honest, the claims handler on the front line is never in a million years going to say, hang on a second, I don't think that's genuine. They have considerably advanced in terms of those attacks. And, you now hear about deep fakes and, how we can have videos purporting to be people tripping or slipping and falling and being injured, etc. I've said when deep fakes are here and prolific, I'm out. I don't think I can do it anymore. I think that's where it becomes just too difficult. But in answer to your question, Magda, it's the one question that keeps us awake at night. It's probably the one question why I've been doing this job for so long, because the more we dig, the more that we find, and we just can't stop digging for it.
So do you think, to close that gap more quickly, do we need more cross-industry collaboration? Should fraud be something where data sharing becomes a must, or is data still, going to help us in having individual companies with a competitive advantage? And while that applied, in pricing, clearly, should it also apply in fraud, or should fraud be something we tackle together?
So I'll answer a bit of that and then maybe pass it over, because I think data sharing always comes up in these type of forums, that you don't go to a fraud conference or a conference like this and don't talk about industry data sharing. So I'm glad you brought it up. The problem is that the data that we're sharing is so antiquated. You know, we are sharing data such as Q, which is the collective claims and underwriting exchange, so every previous claims history. We know it's not being populated 100% across the market. We know it's held on systems that are not fit for purpose in the future. Even the motor insurance database is creaking at the seams. So the MIB is addressing that in terms of new platforming and, in effect, new parameters for industry data. That's a huge step forward for us. But when these databases were built, they weren't built with the purpose of identifying fraud. They were built for purposes of, obviously, establishing full claims histories. And then the MID around compulsory insurance. So we have got a long way to go in this. The intention's there. You know, the Insurance Fraud Bureau has been a huge success over the years. I think the Insurance Fraud Register, you know, sometimes we do something, we implement something, we move on and we forget how good it is. You know, we've now got a register that anyone commits fraud will be on, and it will affect their ability to obtain insurance. That was a huge step forward for us. And it was, you know, it was Richard Davis who was a pioneer in that on behalf of the industry, who's sadly no longer with us. Sometimes we have to just say, we do a lot of good stuff in this space, but there's certainly a huge amount more we can do.
You want to iterate on that, James?
Yeah, no, I completely agree. I was just going to pick up a bit about the IFB, and I think they play an incredibly important part. And really, to Scott's point, they've evolved, and they are continuously evolving in a really positive way for us. Being Allianz Commercial, I think historically the industry has been very focused on personal lines motor. Dare I say, so and I know Scott would have to share the same in the commercial sphere as well, that actually the industry needs to evolve more in the commercial space as well. So where fraud is moved from, you can see it quite blatantly from personal lines into commercial lines, that the IFB and the MIB and what they're starting to deliver is actually, it's promising. Yeah, we're not perfect. We can always do more. And to Scott's point again, we always talk about it. We could always do better. We could always do more. But just talking about it today is another step, and hopefully we can continue on that vein of collaborating more with that data.
Yes, and you know, you just mentioned the data is not perfect. Many of these databases have not been built with fraud in mind, right? So, Tom, you've worked a lot on data strategy with many insurers, and in the context of unlocking data assets, finding, you know, the component that will help you with frauds or with claims, and data was thought for something else. Could you actually give us some examples of, you know, what's being done there and how to unlock those data assets? Yeah,
good point. I think data strategy as part of the kind of digitalisation of the insurance process, you know, insurers have sometimes made data strategy a bit of an afterthought, and realisation that actually, you know, it's not just about putting in a new system, a new bit of kit. The actual value comes in being able to access the data, liberate the data in an effective way, and over the top of that, you need a really good, high quality data culture and so on. So it's about your entire data strategy that sits alongside your digitalization. So we, you know, it's about helping people to work out, as you say, what are the key bits of data that they need to bring together. James talked right at the start about application fraud. Well, one of the key bits on that data strategy is how do you ensure that all the data across all of the customer journey is being pulled together. So if they're coming through a broker, if they're coming, you know, how do you get that data flowing into the underwriting data and the claims data all coming into one place? So you've got that end-to-end picture that James was talking about is actually accessible and visible to you from a data standpoint. And I think there's still a long way to go on that in helping insurers get that kind of broad data set together. But, you know, down to your specific question, I mean, you know, typically what we found is that it can be unique to a particular country or a particular type of product line that has where the data's got a certain value. So what we've certainly found is on some of the unstructured data, for example, there are some real nuggets in there that you can get out of the description of the accident and or the event of the insurance claim that are actually highly valuable and see if you can surface that in a useful and interpretable way for the claims handlers, then that's a really powerful data set sitting in a lot of that unstructured data.
Thanks.
Can I just add to that quickly?
Please,
I mean,
go.
I work for a company that's been around for 150 years, and sometimes it feels that some of our systems have been around for 150 years. But we still have, and I know that there are insurers around the market that are still using green screen technology, old style claim systems that, you know, are at some point will be replaced and will be integrated. Trying to build integrations to get data out of those systems to pass to third-party providers is very expensive. And so we have to be very careful in terms of how do we do that. Sometimes we've got crazy workarounds to do it. But the other thing is, anytime you're pulling data out of your systems to be analysed, interrogated, there's the usual risks around data, especially in the counter-fraud space. So there's often a will to do a lot more in this. Practicalities of it and cost of it sometimes become prohibitive.
And that's, again, a very good segue into the next section, which essentially has to do with, you know, the InsurTech startup ecosystem. We're at an InsurTech conference. I think, you know, at least in my case, it has been 10 years of being part of the InsurTech movement. Has it been helpful, very specifically in the context of fraud? Have we seen things that are radically different from what incumbents are doing or we're doing? And to which extent has that, you know, startup ecosystem pushed us to explore new things, or has it generated more friction or more distraction? So, do you want to go first, James?
Yeah, no, absolutely. I mean, I think you nailed it there in terms of it was a bit of a movement. I mean, we are moving. We are on this, I hate the word, the journey as well. So it's a continuous journey. And I think the challenge that certainly is sort of internal to Allianz is that we've got big systems. We've got big ambitions to build big systems in terms of a global outfit as well. So I think the way in which kind of the InsurTech environment is kind of built up in the UK and beyond is really starting to help. Really, starting to open my eyes to understand the art of the possible. Because I think we have this ambition to be the greatest, to build the biggest, to build great with all this data. But actually, there are options out there that can help you integrate this. And I think to Scott's point also is that it's sometimes really hard to be able to integrate some of this, and also the cost element. It's not easy. And I think linking back into what we talk about, what the fraudster can do, the fraudster can go, you know, you can buy this technology or use this technology anywhere. They don't have to go through, dare I say, procurement processes and RFPs to be able to get these sort of tools in place. But I think we're starting to overcome that. We're starting to really understand, okay, so what is the true benefit of what these InsurTechs can do for us? And actually, if there's little nuggets of things that can be done, rather than we're sort of trying to boil the ocean, dare I say, all the time, I think there is merit to actually let's harness this, let's harness that, let's do these little things in tandem to be able to deliver additional benefit.
Scott, any concrete examples and interactions and, you know, war stories on that front?
Yeah, so, I mean, for me, it comes down to two words: incremental benefit. So we often get approached by vendors claiming we can save you tens of millions of pounds, we can identify a load of fraud. First question, how are you going to do that? And how different is it to what we're doing at the moment? And if you can provide us with incremental benefit, I have yet to see a CBA in the world of insurance that stacks up better than a counter-fraud one, because we are linking direct to indemnity savings. So if you can save Zurich £5 million a year and it costs £1 million, then, you know, that's the proverbial no-brainer. And what vendors need to realise is if you can do that increment, and it has to be an increment, it has to be savings that we otherwise wouldn't have found, then, and that benefit will no doubt stack up in terms of cost and, you know, be great for both parties. And what we're looking at now is what's coming next. So we're looking at 2 or 3 different vendors at the moment that are providing something completely different. Apart from the fact that we are in the market for a big ticket data analytics software, but that's another story. But we're looking at document examination. That's another thing. We need all documents, photographs, videos examined for all the stuff we're talking about in terms of shallow fake. The internet's used as a trading tool. It's used as a tool for fraudsters. we need tools and devices to make sure that we are aware of exactly who's interacting with us and from where. We're looking at social media and aggregating social media and other internet sources to provide us with background intelligence checks and information. And but what's next out there? I remember a conversation once that said, would the insurance counter fraud industry like access to telecommunications data? Wow, imagine that. How much would we pay to make sure that every claim that we look at in the counter fraud world, we can run a check on the policyholder or claimant and find out where they were at that particular time? That would be dynamite for us. Whether it happened in my lifetime, I don't know. But it's all about that. Tell me something that I don't already know, and how much value can we attach to that? And the final point it says, when you look at the maths around this, if we save £10,000 by stopping money going out the door, and you're running a combined ratio of 90%, you have to find £1 million worth of premium to make that same £10,000 profit. And that's why counter fraud raises eyebrows when we get it right.
And so can we take that a step further, Tom, and say, we have a partnership program. Does it make sense to actually partner with startups as opposed to giants? Because things like OCR or authentication can also be provided by, cloud providers, Microsoft. So how do you feel in the sense of where is the balance? How do we find those things that are really different in the context of partnering, and how much do we need to build ourselves?
Yeah, and I think part of the answer is in your question there, Magda, in the sense of what's the value add from the InsurTech? And I think the guys were alluding to that as well. So is there something really unique that it would take me years, the equivalent to build, or I can't easily replicate from the wide technology that's out there? So I was talking to a company the other day that have done a lot of work. They've got a whole bunch of professors sitting on sort of medical evidence and looking at all the different terms and how you read a medical report and you take the diagnostics out of it. So there's a whole set of skills coming into that. So they use the technology and the skills, which would be really hard for me to replicate because I only have the technology. I don't have all the professors and the medical knowledge to sit alongside that. So they've built a whole library of medical terms, of acronyms, of understanding about medical things that any of us would, or as companies, we wouldn't be able to replicate that kind of solution. So that would be, if you were asking what's good advice, it would be find your niche, find something that is of value that is hard for insurers to create or develop themselves, but has, to Scott's point, real kind of value add, and that's where the golden nuggets are in the InsurTech space, and they are out there, but there's a lot that aren't as well.
Yes. So we have a couple of very interesting questions from the audience. Feel free to, whoever wants to go first. One of them has to do with, we heard in a previous panel that fraud is not an issue in the context of health. So would you agree with that? Or is your experience different in the sense of, we've seen lots of fraud in the context of health. We had, some questions around what's going on in motor. So feel free to compare if you have some answers on that. Do you want to go, Tom?
So, I would say we don't actually deal with a huge amount of health insurance. We've got accident and health policies. We see fraud everywhere. We see, there's no product that I don't think that's immune to fraud. And it's not just whether it's a policyholder or a third party. There's so many steps in the chain on an insurance claim. Often you've got suppliers, you've got vendors, you've got people who see an insurance payout. And you only have to look at property claims, an example. A builder will come out and say, you need a few tiles in your roof. But when you tell them it's insurance job, they add a zero at the end of it. That's just, what we're up against. So I think there's no way that I would stand here and say that there's any product that's completely immune to insurance fraud.
Yeah, I echo that. I think Scott made the point earlier. There's a load of things out there that we just don't know. I would say that probably in this country, the way the health system is set up is probably more advantageous than in some other countries where fraud is rife in the health market, and it comes from the providers as much as it does from the claimants. But in this country, I think the point that was being made was actually the way the payment system works, which is point to point with the trusted health provider. Then there's less opportunity for it, and I think that's reasonable. But as Scott says, I wouldn't just be assuming that it doesn't exist. So
I have one question that's really good for James, so I'm going to go for that. As insurers, do you provide guidance to brokers on how to eliminate fraud from the outset? And to which extent do you interact with brokers, and how do you help them digitize and prevent fraud for you?
It's a really, really good question. I'd like to know who said that, to be honest, so we'll have a chat after. It's actually a growing thing that we're trying to do at the moment, to be honest, because as I said right at the start, so it's an end-to-end process, and our business is broker-led business. So we rely very, very heavily on our broker network to be able to provide that validation right up front to make sure that the business that we're getting is genuine. And of course, a lot of that, a lot of the fraud that we see is obviously third-party fraud, not necessarily first-party. But to your point around what we're trying to do at the moment, so we've been having many conversations. We have a strategic broker forum every quarter, and the last one last month, to that very point, and this is no word of a lie, that they were talking about how do we bolster that awareness piece, not necessarily training, but that awareness piece to brokers to be able to give advice. And this is not just about what I need to do, but it's about, tell us what are the threats, what do we need to look for, how do we do this, and this, that, and the other. So it's not just about that, training of what systems do we need. Oh, no, that should come separately. But this is more about the threats. Tell us that threats and that engagement piece. I think we're very good at the engagement piece in underwriting and talking about risk, et cetera, et cetera. But in terms of fraud, data sharing, et cetera, with brokers, we need to do more. And actually, we are in the process of writing modules with our broker fraternity at the moment. So in terms of getting brokers through like an academy module. Hot off the press, that we're doing that at the moment, because we think that's it's fundamental. It's our business. We deal with 100% of brokers, so we need to help educate our brokers to be able to work with us rather than not. So hopefully that helps.
Anything you'd like to add, or shall I go into the next?
Just very quickly, from a third-party side of things, so ELPL, motor, third-party risks, brokers represent our customers, and we all owe it to them to try and protect them from dishonest third-party claimants. So there's an awareness piece there. And the other thing on first-party fraud, so where they are representing policyholders who might be dishonest, it's all about due diligence. It's all about knowing your customer and performing checks and background information perhaps a little bit more rigorously. And a good example of that is we're seeing more and more cannabis factories in unoccupied premises, or premises that have been portrayed to be something completely different. So, any landlords that are accepting cash payments at the moment and, not through bank accounts, not doing due diligence on those people that are occupying the premises, big red flag. We're seeing too much of it, and something that the brokers could help with.
Thank you. So the last question I'm going to take, because we have 2 minutes left, is really about something we were discussing before joining the panel. You mentioned some examples around cash for cash. And so one of the questions is really about the primary, victim of fraud is the insurer, but we're seeing non-insurers become victims of that. And it also, sometimes the end customer can be a victim of fraud. So any war stories or, things that we've been doing to prevent that, and how do we make sure that we don't, there's no contagion in how fraud affects multiple parties?
Yeah, I think if we just look at motor for a minute,
Yep.
Just do a show of hands. If I go back 3 years, hands up anybody who had a text message or a phone call saying you've been involved in an accident, there's £2,000 waiting for you for a whiplash claim. Keep your hands up if you've had one of those messages in the last 6 months. So it's kind of gone, but the problem's not gone. And what the government did was intervene and brought about the whiplash reforms, because whiplash was easy. You just said you were injured, it was a subjective injury, and you had to fill in a few forms and say you went to your doctor, take some physiotherapy, and you got your £2,000. That doesn't happen anymore. But what has happened since the reforms is that there are very dubious claimant solicitors out there looking at alternative ways of making money from this. And to do that, we've gone from, and forgive me for using a phrase that we've well worn now, but we've gone from the weakest necks in the world to the weakest head, shoulders, knees and toes. So all the claims we're seeing now in motor are pretty much everything but whiplash. So people who bash their knees, people who bash their elbows, shoulders, even likes of tinnitus. And psychological injuries we're seeing probably in about 2/3 of claims now, where we saw them in less than 1% 4 years ago. So and you only have to look at the press to see insurers coming out of the motor market because they can't make money on it, because it's, you know, it was a bit of a basket case before the reforms, and now we're in the midst of another problem. So I think there's a message out there that we are actively looking and targeting people who are making up injuries and submitting claims for injuries and aspects of damages that just simply didn't happen. And don't underestimate what the industry is going to be doing against that, because we recognise that if we don't act now on it, then we could be in exactly the same position as we were 4 or 5 years ago with all these text messages.
So being very conscious of time, any final remarks?
I think I think the key bit is technology and human combined is the way to be successful on fraud, and you need to be continually investing in both. James.
You took the words out of my mouth, and I said it earlier. It's the harmonisation between people, technology, and delivering that for the customers and the business.
Thank you, Scott.
You don't have to wear a blue shirt to be working in counter fraud. It's just a coincidence.
Brilliant.
Now, my final point is, look, we're always looking for the next best thing in counter fraud. We've got our eyes wide open to it. We certainly haven't cracked it. So, you know, anybody that's got wild ideas in terms of how we can identify more, then we've always got the ears. Thank you very much.
Thank you. And thank you to the audience and to the questions.
Thank you.